putting more than 20% down might be affected after November the 30th.
Not necessarily in a bad way. Right now, they are affected in a bad way based on the way the rule reads as of last Monday. People with 20% down with certain lenders were going to also have to meet that stress test. And a number of people have got together and more or less lobbied the finance department to say, hold on a second, this is going way too far, too fast, too extreme.
Right.
So they've stepped up and said, okay, you know what, we're going to revisit this. And as of right now, conventional business is being done the exact way it was 2 weeks ago. And high ratio is changed. High ratio changed, and just for your listeners, high ratio is less than 20% down. That has changed. You now have to qualify based on the benchmark rate.
Got it. So now, let's say you're somebody who you've got a mortgage, and let's say you're going to do a refinancing next year of that mortgage. Does that mean if they stick with their same lender, they're okay? But if they have to go to a different lender, they're going to have to requalify under the new rules?
If they are staying with the exact same lender with the exact mortgage amount that's outstanding and the remaining amortization and all of that, and all they want to do is renew the mortgage,
yep,
they don't have to do anything. They can stay put. They can stay where they are. If they need to refinance the home to take equity out for whether it be debt consolidation or renovations, children's education, whatever the case is, and they need to access additional equity out of the home, then that's going to be subject to whatever the new rules are that come out on November the 30th.
Got it. Wow.
And we don't know what they are yet. That's the problem. We don't know what the new rules entail, and we don't know how it's going to impact people. But as I mentioned to many people I've spoken to in the last 2 weeks, the lenders in this country, whether they be a big bank or a monoline lender, they are all providing a service to the Canadian public that are trying to buy a home or trying to refinance their homes, and they've done a very, very good job up until now. Now what's happened is the Bank of Canada, the Finance Department, has come out with these swift changes. The banks and the monoline lenders have all voiced their concern, and the Finance Department has finally said this week, you know what, we have to revisit some of these changes because we know that, again, they were a little bit too swift and too severe. So they understand that they don't want to cripple the market. They're not trying to cripple the real estate market or the mortgage market. They're basically saying we have to slow things down so they don't grow at the pace that they have, and we have to make sure that people can afford these mortgages just in case there is a blip in the market and rates do rise.
Got it.
If they do rise, we want to make sure the insurers who are insuring these mortgages in the background, like CMHC, Genworth, and Canada Guarantee, that they have enough funds in their coffers to pay claims in the event there are deficiencies on the mortgages.
So let's talk about real estate investors. Let's talk about how are real estate investors, I guess, affected by the new mortgage rules, because I did understand that some lenders are no longer lending to real estate investors. Is that correct?
That's a great question, because the rule of these, or the announcement of these new changes came out 2 weeks ago. And almost immediately, some lenders who were in the rental program backed out of the rental program. Some lenders who were in self-employed mortgage programs backed out of them. Since the rule came into effect on Monday and more discussions have been had, very many of those lenders have jumped back into the market, and they've said, okay, hold on a second. Yeah, we want to keep lending in this arena, and we want to keep lending alive and well, so we will still lend on rentals, and we will still lend to self-employed individuals. Come November the 30th, we don't know yet what's going to happen.
Okay.
But as of right now, conventional business as we knew it is alive and well. High ratio business has changed. And it has been an interesting week because we've had lenders jumping in and jumping out, raising rates, dropping rates. It's been so interesting because it's been a yo-yo. Nobody has known what they should do simply because there's been no clarity from the government.
Right. Wow. Yeah, I just feel like they've sort of given some of the first-time home buyers a bit of a kick in the stomach because, like I said before, some of those people do have to sort of think about condos now. And I think they've almost created more competition in the condo market amongst buyers of condos, but they've also created more competition amongst renters now as well because some of those people who have qualified before, they can't buy. And so now they're forced to rent. And in fact, just this week, I had a phone call from somebody. I have a condo for sale downtown, and they said, oh, would the owners be interested in renting it out instead of selling it? I said, no, actually, they really do want to sell it. And he was just talking about how difficult it was for him to find a place to rent now because there were so few rentals on the market. So I feel like this is going to affect the market in other ways.
It certainly is, and that's as I mentioned, there's going to be a huge trickle-down effect, and I believe that our lending community and the Bank of Canada, the Finance Department, they don't want to see the economy suffer because of this. They don't want to see the housing market suffer, but they do want to slow things down, and I truly believe that they're going to sit back and wait and see what happens over the next several months, and perhaps come back in the new year and say, all right, we've adjusted this way, now we're going to chuck and jive and go this way, and we're going to correct this. We're not so concerned about that anymore. And that the next, let's say, 6 months is going to give us plenty of time to sit back and figure out how in fact, these swift rule changes are impacting people. And then there are going to be people that sit down and find remedies to all of these problems.
Right.
But to your point, there is going to be some more competition in the rental market for those people who, the sad thing is, they're just perhaps giving up because based on what they're hearing, they think they should be giving up.
Right.
That's the real sad reality here, is that there are people who are backing out of the market, potentially, and not that I've heard of many of them, but there are people that will consider backing out of the market because they think they should, when in fact it might be the furthest thing from the truth. Maybe now is when they, hammer down and figure out exactly a way to get into the market, because at least they'll know it's affordable. At least they'll know they have that stress test in the background that made sure that they can afford it. So
right.
I'll give you an example. I had a client who has been speaking to me since April of this year.
Mm-hmm.
So what is that? That's 6-7 months. They have gone from $650,000 homes up to $750,000 homes. And we were talking 2 weeks ago how these new rules, or the announcement of the new rules, was scaring them.
Mm-hmm.
And they were going to get out of the market. So I said, well, why get out of the market? Why don't you just look at something? If you're stressed and concerned, let's change and shift gears and go down to perhaps 600,000.
Right.
And they wanted no part of it. They wanted nothing to do with it. So we sat back and we waited, and I got a call from them on Tuesday saying that they were going to see a house that was listed at $599, and they got it for $625. So my point is that, and they're over the moon. They are
right.
completely over the moon and in love with what they have just acquired. But 2 weeks ago, with the media reporting the way they were, with their 760 stretching their limits just too high, they didn't see any light at the end of the tunnel, and now they've got it. They bought their house. So
right.
I think this is going to force people to be more realistic. It's going to force people to sit back and take stock in what they're doing, why they're buying, where they're buying, and how much they're willing to spend. So from that standpoint, it's going to be interesting. It's going to be an interesting adjustment over the next few months.
Interesting. I mean, it almost sounds like the perception isn't quite the reality. However, it has forced some buyers or taken some buyers out of the market so that, for example, that couple that you were talking about, they were able to get a $599 house for $625. Because if this were spring, that $599 house would have sold for $700,000. So that's why we were doing our numbers at $750, $760. Exactly.
Because we thought that it was going to be exactly like it was in the spring, but I don't know what the effect of the. Again, it wasn't a price reduction. It was in fact over the list price.
Of course.
But it wasn't perhaps as crazy as it might have been in the spring. You're right.
Yeah. So it just sounds like if buyers are willing to stick it out, this is actually a good time for them to buy, because everybody else is sitting on the sidelines waiting to see what happens. They're not coming to the party, but basically this is a good time for people who are willing to stick it out to get into the market and get something. 100%.
And the key thing to keep in mind for anybody that's listening is that there are people convincing themselves to get out of the market just based on what they're hearing and how they're interpreting it.
Mm-hmm.
Look into it and ask the questions and go through the numbers and speak to people who know. It's interesting, or it's great that you're getting this information out there, because there are people that are so deflated right now. They're deflated thinking they can't buy, never will buy, they missed the bubble, or they missed the wave. The fun is just beginning now. Now it's time, as you said, there are people going to sit back and perhaps rethink things and find out that they're going to be able to get into the market, just perhaps at a different price point than they were thinking.
Right. Interesting. But I guess on the same note, it is it is deflating for some people that now are told they have to spend less, and like I said, that pushes them into a condo versus a home. And it's funny, maybe it's something that I belabor because I think that for people to generate more wealth for themselves. I do believe that it's better for them to own a house over a condo because I see the value appreciating in a house much faster. So I think that when people sort of take that opportunity away from people, I guess I feel that I think that is sad because I think that everybody should be able to get the opportunity to purchase a house if they want to.
There is truth to that for sure, but the other thing to keep in mind is that regardless of what you buy, whether it be a house or a condo, it's still making you money as opposed to renting and making your landlord money.
Absolutely.
From that standpoint, I've said to many people, well, you can't buy that $600,000 home just because you don't qualify. Why don't you look at that $400,000 condo?
Right.
It's better to own the condo rather than renting somewhere else for $1,700 a month. If, in fact, owning a home is what you want to do, there's nothing wrong with renting. There's nothing wrong with being a tenant, or there's most certainly nothing wrong with being a landlord. But at the same time, it's getting into the market is the first step, because the minute you get in, you're less frightened to do it a second time.
Right,
the first
absolutely.
time is always that's the biggest plunge, and that's where people get either so nervous they convince themselves to get out of the market, or they take that plunge and get in and then look at what happens. They still need somewhere to live. So getting into something, regardless of whether it be a condo or a detached, semi-detached home, townhome, they're getting in. And that's, I think, the key thing that people need to realize. They need somewhere to live.
Yeah.
Where do they want to live? Do they want to live in something they own or something they rent? And either scenario is fine as long as it works for them.
Yeah, absolutely. I mean, obviously I'm biased. I think it's a good thing for people to own because, that spending $1,700, $1,800, $2,000, $2,400 a month in rent, I think is certainly a lot of money. Now, that being said, on the other note, I'm also a landlord, so I love my tenants who are willing to spend that much money because that helps me. So I guess I sit on both sides of the fence, but ultimately I do think it's in everybody's best interest to own something so that they are paying themselves first. And, at least that way when they retire, they own wherever they're living, because at that point I'm assuming they probably wouldn't have a mortgage anymore, but, they don't owe any rent to anybody, which I think that's where you want to be when you retire. You don't want to owe anybody anything.
Absolutely. I agree with you.
Awesome. Well, thanks so much for chatting with us today, Joe. Joe, where can our listeners...
Thank you.
No problem. Where can our listeners reach out to you? Where can they find you?
They can email me at joesammut@mortgagegate.ca. That's JOESAMMUT @mortgagegate.ca, or toll free at 1-888-575-4403, extension 21.
Awesome. Thanks so much, Joe, for joining us today. And you've been listening to The Morrison Report. You can find me on Twitter at Develle Morrison, or on Facebook or Instagram at Develle Morrison as well. And hopefully you'll listen to us again.
Thanks again for joining us today for Toronto Real Estate Market Insights. And you can reach out to me at Develle@BosleyRealEstate.com or on Twitter at Develle Morrison. See you soon. Thanks for listening.
You've been listening to The Morrison Report. Hosted by Develle Morrison, sales representative for Bosley Real Estate Limited Brokerage, real estate investor and best-selling author, bringing you insights on the Toronto real estate market. Join us for another podcast.